Now let's move into York Region, specifically talking about the freehold market. And it's interesting because we have seen a slight uptick in median price month over month, which is fantastic. We want to see through the spring market, we want to see that increase. 1.4% is obviously underperforming what we've seen in previous years, especially even last year, which is down 7.2% year over year, because we just had a very different spring. We had no talk of tariffs last year when we were wondering about what was going on with the market. We had a lot less concern in the economy and jobs and how these tariffs might impact people. So I think once that uncertainty starts to dial back, we should start to see this turn around. But I think those year over year numbers, Matt, will be a challenge for at least a couple more months to come.
Yeah.
Really June, I'd say last year, once we first got our first interest rate cut, the market reacted in an opposite way of what you would have thought at face value. And so I think by June, we'll start to see these balance out in a better way in terms of our year over year numbers. We are seeing a slight uptick in our days on market, termination volume up as well. Not like we've seen in previous months, Matt. I think people are getting a better sense of where they stand, which is pretty solid. But to see freeholds in York Region decline really in terms of sales volume, I know it's like by 6 units, but still to see that come down, it's just not what you're used to seeing. And
not going from March to April,
Yeah.
You should see this. Like I said, this is the busiest time of the year. This is when most people want to do transactions to get, move out when the kids are done school and move into the new place, be there for the summer. And so to see a decline in sales from March to April is significant, even if it's only 1%.
Yep, absolutely. And when you think about the amount of times you've been sitting down with a client and they say, I want to wait till after March break, or I want to wait till the gardens are looking good, the snow's melted, I want to wait till I can open the pool. We just see more sales volume, more inventory hitting the market as we move through the spring. And right now we've been seeing it in terms of our listing volume, although I'd say it was a little lateral there from March to April in terms of new listings hitting the market. But we're right in the mix of where we should be historically for new listings. The difference comes when we start talking about our active listings. Not as high as we've ever been, only surpassed there by 2021? No,
I think it's 2018, 2019.
2018, 2019.
The last time we saw interest rates as high as we've seen them now.
Yeah, and recovery years from our 2017 changes. So yeah, we're right in the mix with those other years where we're coming off of big changes in the market. And like you said, higher interest rates.
Yep.
Here's the one that people are feeling is the lack of sales volume, right? We're now, again, the only time we've sold more is then when we were all locked down and couldn't leave our houses. So it's a shame to see the sales volume so low when we look back over the last 15 years. And I think that we need some more of that certainty to come back into the market, and hopefully a couple more rate decreases to make affordability just a little bit easier for people. Like I said, last year, Matt, we sold more homes at higher interest rates and higher median prices. So affordability has got better, but it's not being reflected in our sales volume yet.
I mean, I can't stress the significance of this chart. The bottom in April, the entire country was basically shut down. People didn't know if they were still going to have a job. People didn't know what was going on. People didn't know how long this was going to last for. And, we're just above those numbers.
Yeah.
It's a significant drop off in sales for, an economy that can get out and do things. They're not being told to hunker down at home. So that's just how little confidence in the market right now there is because of the tariffs. I think ultimately, maybe there's some affordability in there as well, but I think tariffs are the biggest driver here.
I think so too. And again, looking at that, how all that the sales volume got pushed into our July, August, September, October, where we know that this section right here, these months, typically where we see the most amount of sales happen for the year. We're not seeing that again. Could we see this uptick to a higher number in here? I think that's definitely possible. I don't think it's going to be record breaking like we saw in 2020, but nonetheless, I think we should see a steady increase in sales start to move through. And when we talk there, Matt, about median price, like we said, kind of sticky. We're still above our 2021 and 2020 pricing, but below our previous 3 years in terms of median price for freehold properties in York.
Even for the pricing here, 23 and 24 were almost the same price you were paying for the average detached property in York
Mm-hmm.
region. And we can just see, how little activity there's been to bring that price down to where we've seen in 2021. Um, you know, it's it's a big gap when you're not selling homes.
Yeah. I think as you look at the later half of the year for 2021, again, we're talking about York Region freehold properties, but this will hold true in a lot of places. We're over 2021 pricing right now. And the reason why we're referencing the years is because think of all the people that bought since 2021 to now. We're going to be coming into a time where if this kind of holds steady, because we're not anticipating any major upticks in terms of average price, we will be then underwater in terms of what 2021 people were purchasing. So there are still going to be more people impacted yet to come at those higher purchase prices, higher interest rates coming up to their renewals soon. And we're going to be coming in at values under what they purchase. So I think as much as we want to be positive, there is still segments of the market that will be feeling more pain in the coming year.
Yep.
Months of inventory up. We're now up to just under 6 months in York Region when looking at freeholds. This has been kind of a steady climb. And I mean, minus the peak, not too dissimilar to what we were talking about there with our 2017 to 2019, both of what we saw there in terms of active listings and, of course, directly carrying through to our months of inventory because our sales volume is so low. And I think that's why we're seeing the peak, because even through those years, we were selling more in the current month than we are now.
Mm-hmm.
This is one we talked about a lot, Matt, and for you, those of you that are realtors out there, the multiple offer strategy is something that I think still needs to be discussed. And it's interesting to say that because since the change in 2022, it's honestly been off the plate for most people. If you're, I guess, depending on the place that you are, but when we're looking at the amount of choice that a buyer has and the lack of buyers out there, it just does not make sense to hold an offer date, have buyers compete, hopefully bring that price back up to market value or a little bit above. We've seen a lot of those fail. There was a couple of times through like last spring where we saw there was so little inventory, a lot of buyer demand. It worked out, but we saw a big uptick, let's say, coming through the start of this year. And the reason I think that we're seeing that percentage of percentage of homes selling above the asking price, why we're seeing that percentage go up, is because there will always be homes that will command that type of demand from the buying pool that's out there. There's always going to be the home that's on the backing onto the ravine, on the quiet court, whatever it may be, in the desirable school district. Those will always command that type of attention, so that strategy can work there. And because we're selling a lot less homes, that percentage is inflated. So it makes sense to me to see that upticking. The other thing, Matt, where I've seen this happen, specifically for a home that we were doing a consultation on, there was a home listed at $899 for a month, didn't sell. They reduced the price to $800,000, $799, and they sold for $875. Now, when you look at that, it makes no sense. At $899, why did somebody not bring that person a buyer for $875? You can easily negotiate that. Why I think it worked for them is they created urgency in a market that has no urgency, to speak in general terms. So I do think that there's elements where you have to take a look at that option.
I'm working with clients who are looking to buy a fixer upper, put some TLC into, and a lot of the homes that we're going to see are having offer dates on them because they don't want people just sitting on the sidelines and watching some of the nicer homes in the area sell, and maybe they're reducing their prices to sell. They're trying to bring people off the sidelines right away, show the value. And to be honest with you, I think we've looked at 3 places that were holding offers, and all of them got 3 or more offers on the property. They're not selling for above market ask, but they're getting a decent price for the property that they probably would have got in a regular market had they just priced the home at where close to where they wanted it. So it
Yeah.
is working for some situations for sure to get people off the sideline and get offers on the property.
Yeah. I think the regular rules still apply. So first, let's be clear that this strategy takes a ton of skill to pull off. Just in general, even in the hot markets, to really capitalize on it, there's a ton of skill that goes along with it in terms of
Yeah.
where you're pricing it, how you're communicating with buyer agents, how you're setting seller expectations, specifically that communication with other agents to set the expectation of where you might be, to bring enough people along so that you have a lot of offers competing, because it's still only going to be maybe your top two, top three that are going to boost that price up. And I think that a lot of people still just get it wrong. They get the pricing wrong, they get the expectations wrong, they pick the wrong house to do it on. And last month, the last few weeks, I've been helping a buyer down in the west end of the city. And we came into a bunch of places that were getting competition, and a lot of them did very well. And funny enough, as of this week, I've had 3 of them that we had interest in originally all miss their offer dates, not have offers registered. And same thing, our client decided ultimately that it's not the right fit for them. There was too many buts, is what my client liked to share. He's like, I like the house, but where it sits, the street location, the floor plan, whatever it might be. And there's too many buts. People aren't going to come forward. So you need to be mindful of that. But anyways, coming back to this, we saw a big uptick at the beginning of the year, slight rollover, sitting at about 30% of homes are still selling above the asking price, which is interesting to watch. And I think it comes down to how can we help create urgency? If you're representing a seller right now, how can you create urgency among those buyers to take action? Help your seller out in the best way possible. Matt, talk to me about highlighting our 2 million here, 2 million plus, and the amount of homes and inventory. When we were putting these charts together, I thought of a story and I want to share it real quick. I had an agent that I just did a deal with, and she's like, by the way, I've got a home for sale in the Mill Pond. It's worth 3.6. It's priced super competitively. It should really move, but we've got nobody, coming forward. I don't know why it hasn't sold yet. In the back of my mind, I'm like, well, it's because it's 3.6. What's the buying pool at 3.6? But you speak to some of our other luxury colleagues and their products are moving. So it's not to say that that doesn't exist. But where my mindset went was when I started in 2007, the average price was $366,000 on the Toronto Real Estate Board. We're now currently at 1.1, and that's a down number considering where we've been at. Still a 302% increase in average price dating back to 2007. So the amount of luxury homes, there's no doubt we've built a ton of them. In Aurora in particular, we've built a ton of them. But
And ultimately, these are chipping away at the average price
yeah,
for detached homes, because a lot of these people are going to have to bring these luxury home prices down a bit to get them off get them off the books if they need to get them sold. And what we've noticed is like homes underneath 2 million are getting around 98% of the asking price, whereas homes over 2 million are only getting 95. So they're taking the discounts. We can see they're on average taking 3% less to get the property off the market as of right now.
yeah. And still seeing that the bulk of the sales are happening from that 1 million to 1.5 range, across those 2 categories there is where we're seeing the most amount of sales. And funny enough, the most amount of listings is hovering in that 1.25 to 1.5 range. Other than our 2 million plus, but I want to exclude that because it is quite a price point. But nonetheless, when you're hovering in this price range, there's a lot of stuff that's moving when we're talking about freeholds in York.